Hi, I'm Prithvi. Today I would like to talk about the current scenario in the banking industry and the challenges it is facing. There are, as of 2020 March, there are 22 private sector banks and 27 public sector banks. There are various threats that are faced by the banks. The first one and the biggest one is the amount of non-performing assets. The recent Yes Bank moratorium and the PNB scam, the loan amount defaulted by Kingfisher are one of the few examples. PNB National Bank scam amounted to around 9,000 crores. Kingfisher defaulted around 4,300 to 6,000 crores in SBI alone. So it is estimated that a total of 2.45 lakh crores are will be due to defaulted loans. So this is an asset that is not coming back in the near future. The amount is stuck, the companies are at losses, and the banks that have given loans to them are now suffering with the amount that is lost. Second, to increase public spending due to the economic slowdown both globally and domestically, the banks were compelled to reduce the interest percentage so as to increase savings and increase the spending. So this has led to a sharp decline in the profit margins of the banks. Third, uh, since India is a rural country and many of the rural branches located are running at a loss because of high overheads, and there is still a prevalence of barter system in most of the parts of rural India where money is not in the hands of the deposits in the form of deposits with the banks, rather it is in the hands of a few or the people trading it in terms of cash. Fourth is the competition from non-banking financial institutions. This is one of the major threats that is being faced by the banks in the recent times. As far as deposit mobilization is concerned, commercial banks have been facing stiff challenges from non-banking financial intermediaries such as mutual funds and housing finance corporations, leasing, and investment companies. All these institutions compete closely with commercial banks in attracting public deposits and offer higher return rates, interest rates than are paid by the commercial banks. So tackling these institutions becomes a tough task for the existing commercial banks with their existing infrastructure, with their existing working mechanism. A few solutions, if we have to assess and suggest for the banking sector in India, is the first thing that comes to my mind is approval of loans by RBI in case of high amounts. This is to be done to make sure that single companies do not take up large amounts of loans and then having a chance of defaulting. So an anonymous body or an RBI monitoring such approval of loans will ensure transparency, and in case if there are any anomalies, it can be caught by the bodies itself. Second, the tighter norms by RBI. Mechanisms like asset quality review are already in place, but a tighter norm, more control over what the banks are doing and what they are supposed to do and what not, and how to assess the parameters, how to assess the working process should be more tightly monitored by RBI is what I feel. And an obvious solution that comes to anyone's mind is an increase in CRR or SLR ratio, which would enable the banks to keep some amount with them, and in case of loan defaults or in case of slowdowns, the banks have sufficient amount so that uh, the process keeps running. Thank you.